So if I buy that commercial building and say it's got like a crane in there, can I establish a value for that crane and then depreciate it 100%, or would I have to do a depreciation schedule?
Gotcha. So in that particular case, I think that crane could go in as a separate piece of equipment. In that regard, you could have the option to either accelerate it, fully depreciate it, or kind of pick something in between there to say, this is what I need this year versus, because you're allowed up to a threshold and you can kind of then claim from zero up to that threshold. So sometimes, you know, it might apply for a client to use the whole amount, or maybe they only need part of it because there's no sense generating a huge loss if there's no reason, you know, no availability to carry that back to recover taxes.
Totally.
So yeah, that would be kind of one way of looking at that. If you were to say buy a residential property, which I think you're well accustomed to.
Yeah, that's gonna be my next question.
There you go. So if you're getting into that space and maybe you're doing a bunch of work in there, you're replacing the floors, things of that nature, those particular items are just going to kind of follow along that building and end up into that class 1.
Okay.
They just kind of blend into that same pool, and you just keep increasing that particular pool as you make those particular renovations.
Okay.
So yeah, I guess the differentiating thing would be, is it just a reno that's in the structure of the building, or is it a separate piece of equipment that theoretically you could take that crane out, someone else could use it somewhere else?
Yeah.
Whereas if I replace the floorings in the boardroom here, probably no one else is going to take the flooring and put them somewhere else.
Right.
So